Hello learners. Today we will be discussing on different branches of accounting. So in the earlier classes we have discussed and we have understood what is accounting, what are the accounting principles and what are the different kinds of accounting, different books of accounts and all those things we have discussed. So today we will be seeing what are the different branches in accounting. So the major branches of accounting are financial accounting, cost accounting and management accounting. We will see the definitions or we will see what is the meaning of financial accounting, cost accounting, management accounting and what are the major characteristic features of this accounting and how they are different from each other. So financial accounting, as the term says, financial accounting is which deals with all the financial aspects. Okay, and then financial accounting is a process of systematic recording of business transactions in various books of accounts maintained by the organization with the ultimate intention of preparing financial statement. So it clearly means that the process of identifying the financial transaction, then entering the system, entering those transactions or recording those transactions in a systematic way or systematic order in the books of account. The books of account include the journal, which is a prime book of entry or original book of entry, then the ledger maintaining trial balance, and finally the financial statement. The financial statement include the income statement and balance sheet, and the income statement is subdivided into the trading account or manufacturing account and income the profit and loss account. So the in financial accounting, the major intention is, or the major intention of maintaining financial accounting or the process of financial accounting is for preparation of the financial statement, and the financial statements are the income statement and the balance sheet, and which helps to identify, which stays as a proof, as a documental evidence for analyzing or interpreting the business credit worthiness or financial position of a particular business. So financial accounting, it deals with it is a process in which the financial transactions will be recorded and finally that will be interpreted or that will be summarized to analyze the financial position or the credit worthiness of a particular business. Okay, now we'll see what is cost accounting. As the term says, the term word means, cost means all kind of expenditure. In cost accounting, all kinds of cost will be recorded. All the transactions in which cost are included or kind of expenditure are included will be recorded. So cost accounting is a process of classifying and recording of expenditure in a systematic manner with the intention of ascertaining the cost of a cost center with the intention of controlling the cost. So the major intention behind preparing cost accounting is to control the cost. So there is a definition given by Institute of Cost and Management Accountants for the cost accounting, and it is defined as the application of costing and cost accounting principles, methods and techniques to the science and art and practice of cost control and the ascertainment of profitability, as well as presentation of information for the purpose of managerial decision making. So it involves application of the costing and cost accounting principle, methods, techniques, and finally the intention is to control the cost, ascertain the profitability, and also it act as an information for the purpose of managerial decision making. Now we'll see what is management accounting, and this management accounting is more important for us because being a management student. So the term management accounting refers to accounting for the management. Okay, and accounting which provides necessary information to the management for discharging its functions. We have already learned the functions of management, and so here in management accounting it refers with all kind of accounting that happens in a management, and it acts as information for the management in decision making and discharging its functions. So there is a definition put forward by the Institute of Chartered Accounts as management is as any form of accounting which enables a business to be concluded more efficiently. So the management accounting is any form of accounting. So that may be in management accounting, cost accounting may come, financial accounting may come, cost sheet may come, like it can or general accounting may also come. So it is any form of accounting which enables a business to be concluded more efficiently. Okay, so now we'll see The scope of management accounting. The scope of management accounting is very wide and broad based, and it includes within its folds. So what are the major scopes of management accounting? We'll discuss one by one. The first one is accounting. In management accounting, we have, as we have said earlier, or we have discussed earlier, the management accounting is any form of accounting. It includes any form of accounting which are used in a management. So in accounting, the accounting in the management accounting, the accounting is again divided into financial accounting, and cost accounting is also included in the management accounting. So we have learned accounting is a process in which the financial transaction, all the events or transactions which are of financial nature will be recorded, classified, summarized, analyzed and interpreted, and finally that will be communicated to the user. So here in financial accounting, it deals with the recording of all the business transactions which are of financial nature, and finally that result to the preparation of the final accounts. The final accounts are income statement and balance sheet. Okay, and in cost accounting, it deals with recording income, recording all kinds of transactions which are of expenditure or income, which are of income nature of expenditure. So in cost accounting, we will be entering all the transactions in which costs are included, whether that is an incoming cost, that is income, or kind of expenditure. So the scope of management, the first is accounting, and in accounting, financial accounting and cost accounting. Next scope is cost control procedures. So how it helps in, or how the scope is in cost control procedures, we will discuss it. It deals with the various steps involved in the process of controlling the cost. So thus in turn, it may deal with establishment of plans or budget for the future, comparison of actual performance with the planned or budget performance, computation of various variations between planned and actual performance. So in management accounting, it helps in cost controlling also. So cost controlling means it will help to establish or analyze the existing plan with the future plan or the upcoming plan, and also helps to establish the plans based on budget. Okay. Next scope, it helps in reporting. It deals with the presentation of cost data, statistical data, or any other information of various levels of management. Next point is taxation. In taxation, how it is important? It deals with the computation of income as per law, filing tax returns and making the tax payments. Okay, so in tax payments also, there lies the scope. Next point is audit. It deals with devising the internal control system and internal audit system to cover various operational areas of business. In many cases, it may also deal with management audit, which is the evaluation of the managerial performance. Okay, and in the methods and services, it deals with providing management services and management information system. It also deals with various methods of reducing the cost and improving the efficiency of accounting. So what are the scope of management accounting? The management accounting scope lies, it is widely spread, like in financial accounting the scope is there, cost accounting, cost control procedures, reporting for the preparation of records, taxation, also in audit and other methods and services. So these are the scope of management accounting. Now we will see what are the disadvantages or limitations of management accounting. In spite of various advantages available from the management accounting, in the era of ever increasing complex business operation, it suffers from some limitations also. So we will check out what are the limitations. Very wide scope of management accounting is a limitation by itself. It attempts to operate in a wide range of areas, and it is quite possible that it may not be able to do proper justice to all of them, since it is widespread across, and it is spread in financial accounting, management accounting, cost control, auditing, taxation. So it will not be able to do proper justice to each of them. Okay, so there lies that is one of the disadvantage or limitation of management accounting. Next is, in spite of the fact the management accounting provides various details required for qualitative decision making, thus attempting to avoiding the possibility of intuitive decision making. In many cases, in practice, the decisions are based upon intuition of decision maker rather than the scientific data available for. Therefore, Next is the installation and operation of management accounting requires a very elaborate organizational structure and a large number of rules and regulations. It may make the management accounting system a costly proposition which may be implemented only on large scale organizations. So small scale organizations cannot go with this management accounting. They cannot they cannot go with the management accounting. So this management accounting is useful only for the large scale organization. This again become a limitation. Management accounting system is still in the evolution stage and hence suffers from various limitations which any system may face in the initial stage, like requirement of constant improvements of the techniques and uncertainty about the application of the system. So since it is in the initial stage, there are many drawbacks or limitations. So these are some of the limitations of management accounting. Now we'll discuss what are the major characteristics of financial accounting and management accounting, and we will compare them. So in financial accounting, the party to be served is it provides accounting information to the external users. When it comes to management accounting, information is provided to within the organization, that is for the internal users. The frequency of report preparation, in financial accounting, after the completion of accounting year, okay, after preparation of accounting year, the financial accounting will be prepared, account will be prepared. The management accounting very frequent depending upon the purpose and prevailing situation. So it may vary according to the purpose and situations, but the financial accounting, it is prepared at the accounting year, at the end of the accounting year. The contents in the report in financial accounting as per the Companies Act, and management accounting, it is as per the management's requirement. What all the management requirement that will be included in the the management account or in the reports. Okay, what is the format of reports? The financial accounting, it is according to the Companies Act, and in management accounting, it is again according to the requirements, suitability and convenience of the organization or the business. The unit of study in financial accounting is overall performance of the company, and when it comes to management accounting, detailed study of the each segment, division or productivity or activity will be discussed. In financial accounting, overall performance will be analyzed. The principles used or principles followed in financial accounting is the generally accepted accounting principles, and in management accounting there is no such principles which are applicable. So in regards to the auditing report, the financial accounting, it is subject to the legal aspects, and in management accounting there is no legal aspects. And in regards to the publication, the financial accounting reports will be prepared in the annual reports, and management accounting, the reports are circulated among the managerial persons and they are not published. Okay, so these are the major differences or characteristics of financial accounting and management accounting. Now we will check out what are the major characteristics of cost accounting and how it is different from management accounting. So the primary objective of cost accounting is to it aims at cost ascertainments of goods and services. It lays stress on the stage and wise computation. In management accounting, the primary objective is to is a presentation of cost data to the extent required. And the time factor, when we consider the time factor in cost accounting, time factor plays a vital role because reports have to be submitted on time. And in management accounting, since it is the requirement of management, there is flexibility in the timings of the preparation and submission of the reports. Governing principles or rules, which rules or the principles will be followed. The cost accounting will be following the cost accounting reports, rules and guidelines. But in management accounting, there is no that kind of rigid rules and regulations. That will be all according to the management. And information coverage in cost accounting, it certainly lays emphasis on the cost data. It is narrow in the scope, but management accounting, it is wider in scope, and these reports are wider in the scope, not only cost but other areas like financial areas, other cost areas, cost control areas, taxation areas, auditing areas. All these areas will be considered in the management accounting. So these are different branches of accounting. So in the upcoming classes, we will be discussing more on the cost accounting and what are the characteristic features, what are the limitation, and also the cost sheet preparation will be discussed. So far, I guess the theoretical aspects of different branches of accounting is clear to you all. Thank you.